Hello and welcome back to the channel. If this is your first time with us, my name is Alex. I am your Hawaiian guy right here in Canada, trying to help you new investors build a stronger and safer portfolio. Here in this channel, we like to talk about all things regarding finance. I give you my top stock picks for the week, tell you what I have on my radar, and maybe perhaps something you should keep on your radar. I do show a real portfolio that we've been building together since May of 2020. Answer any questions you might have, try to simplify some of those terms and terminologies that are a bit difficult to wrap your head around, but above all, we try to have a little bit of fun. If that sounds like something you're into, do me a favor guys, hit that subscribe button, hit that like button, blast me with some comments, I really want to hear from you, and let's get into today's video. All right, let's get into today's video. What I want to talk about today is something that I've been seeing a lot on YouTube, on the news, my colleagues at work, as well as some of my friends. And a lot of individuals are kind of questioning if they got into the market at the right time or if they should be in the market at all. Right now, we are seeing a correction in the market, or market crash, some people might call it. But I am here to tell you, this is not the first time we have seen a correction market, nor will it be the last. I can guarantee you that. If we kind of scoot back a little bit in time and go back to, I want to say 1906, maybe 1907, you saw another panic in the market. And that was when a lot of individual investors kind of borrowed buttloads of money from the bank, and they were trying to corner the shares in a company called United Copper Company. Unfortunately, a lot of speculation in the company, everything just went bust. A lot of individual depositors in banks lost their confidence in banks and just started withdrawing their money like mad. And you did see a correction in the market of about maybe 15 or 20%, but 15 or 20% was a huge portion of the market at that time, which is why they call it a crash. Now let's scoot forward about 20 years or so, and this is when you see the roaring 20s. You see a lot of those cool cats with the zoot suits and those funky hats. You know, probably those suits are the reason there was a stock market crash. I don't know, maybe. Anyway, during this time, you saw a lot of individuals borrowing way more money than they should have. They were overproducing a lot of products they shouldn't have been doing. And unfortunately, I had this idea that the market would just perpetually grow and grow and grow and grow and never ever decline. Well, of course it did. In October, I want to say 25th, 26th of 1929, you saw about a 20 to 25% correction in the market. Followed a little bit later, you actually did see about an 80 to 85% decline in the market, which was huge. Which is why, unfortunately, a lot of individuals took their own life because they lost millions upon millions of dollars. Now we're going to jump ahead a little bit to about 1987, 1988, and this was the Black Monday crash. This is when oil prices were sinking, you had the Iran tensions with the US. There was just too much pessimistic in the market. There was a lot of computerization making brokers be able to trade more funds faster and quicker, but unfortunately on the flip side, they weren't able to sell it as quick. And you saw a decline in the market of about 15 to 20% again. I want to say one thing. Normally when we're talking about a correction in the market or stock market crash, typically we're talking anywhere from a 10 to about 20, 25% correction. That is normally what it is. The Wall Street crash in 1929 was a bit of an outlier where they lost about 80 to 85%. But typically, it's anywhere between 10 to about 25% is when you see a correction in the market where individuals start to panic a little bit. All right, let's scoot forward a little bit further to perhaps one that a lot of you guys are familiar with, and that is the dot-com crash in 1999 to 2000. This is when anything with a .com after their name on the World Wide Web was just getting too much money too quick. A lot of stocks were jumping 1,000%, 1,500%, 2,000, 2,500% in just a short period of time. And these companies did not have a solid business platform, and they shouldn't have been in the market to begin with. And you saw them just wither away really quickly. During the dot-com crash, this is when the NASDAQ fell more than 75%. And then we kind of come closer a little bit further, and this is back in 07, 08 when you see the subprime mortgage crash. And basically what this was a whole bunch of people getting subprime loans, buying homes that they should not have bought, or they had no business in actually investing or purchasing. if you can get an interest rate of 1 or 2%, of course you can buy a lot more house versus that interest rate is 4 or 5. But when those interest rates creeped back up, they were no longer able to pay their mortgage. So a lot of people started to default on their loans, and you saw a huge correction in the market of about 15 to 20%. You saw a drop of the Dow Jones dropped about 500 points in a short period of time. Again, this was one of those things where just people were overextending themselves, purchasing homes they had no business buying. And of course, that brings us to present day, where we got our good old buddy, the Rona, which the reason for this correction is individuals are not able to leave their house. You're not able to go shopping, on a brick and mortar type store. You weren't able to leave your house or do anything. So it tended to make a lot of different sectors in the market kind of just plummet down. Airlines, hotels, restaurants. So a huge decline. But again, in this correction in the market, we only saw about 15 to 20% correction in the market. And that has a lot to do with the tech sectors just booming over here. Even though you had a lot of the hospitality sectors over here down, it was kind of balancing things out with the tech sector over here. So this kind of leads you to the question, okay, Alex, is it a good time to invest in the market? And to that question, I say yes. It is always a good time to invest in the stock market. And I say this, and I have to be clear on this, I am not a financial advisor, nor do I have fiduciary credentials. I'm just an individual who's been trading in stocks and commodities for over 2 decades, and I'm just giving you my opinion. But before you invest in any company, please make sure that company is right for you. Do your due diligence before you invest your hard-earned money. So, but I do have to clarify, in a correction market like this, a lot of you who've been watching my videos for a while, you know that for the most part, I do stick pretty much with dividend-paying funds. Now, that is very diversified. I do have the financial sector, the health sector, the IT sector, but I tend to focus more on dividend-paying stocks. Now, I really want people to understand that when you're investing in the market, you're gonna have times when you're gonna see a decline. You're gonna have times when the prices are just soaring. I mean, 2020 was really unusual. Normally, you don't see a 50% growth in your portfolio in less than 7 or 8 months. But this is, if you think back to the old Albert Einstein equation, money times time equal buku cash. Is that an Einstein thing? Maybe not Einstein. But my point is, the longer you keep your money invested in the market, the more it will grow. You need time to gain equity in the market. It's not going to happen overnight. Occasionally, you might have those GameStop kind of stocks out there, or AMC movie theater, but those are far and far between, and it's hard to really know how to find those particular bargains. So my advice to myself is, during a correction in the market, if I can find a really great company at a fair price, I myself would try to purchase as many shares as I could, because I know down the line that company, if I have faith in that company and that's a really solid company, I know it will return to its previous selling price prior to the correction and definitely gain more in the coming years. I hope this information was helpful. And like always, before you put your money into the stock market, make sure it's something right for you, because this is a journey that you're going to have for a long time. And don't just hop in and out of companies. Find something you really like and put your heart and soul into that company, because again, you are part owner of that company. All right, guys, until I see you next time, aloha.